Hello, I'm Finola Burke from RAS, and today our focus is on purpose product, rent.com.au, ASX ticker RNT, and joining me to discuss the company's progress is CEO Greg Bader. Welcome, Greg, and thanks for coming back.
No, Finola, thanks for having us yet again.
So rent.com.au reported quarterly group revenue growth of 11% to 786,000, driven by continued improvement in the advertising spend. Now, this has been part of your targeted strategy to diversify advertising revenues and attract some new advertisers. Can you talk about that strategy and how advertisers are responding?
Yeah, so if we roll back, well, to be honest, 12 months, we all know the story of the building industry. That continues, the delay on housing construction, et cetera, et cetera. So quite logically, our audience are a lot of them transitioned to first-time ownership. So they were a big target audience of ours, the building industry. So with that winding down, we've had to diversify. Telco is certainly a large part of that now, and it's fantastic to have TPG on board, and we're doing some really interesting stuff. And once again, leveraging the uniqueness of our platform and I guess, the level of resolution we're able to offer customers or partners. So, for example, with TPG, we can look up a property if it's 5G capable, then we can offer a 5G product. But expanding out of that as well, we just need to do better, and we are doing better at leveraging our, I guess, unique attributes. So being renter only, we're about 70% new users every month compared to some of the other portals, which are as low as 20%. We don't have snackers. We have people coming in and transacting. So whilst we may not have the overall traffic volumes of someone like REA, we certainly have a refreshing audience at a lot faster rate. And then some of the other unique parts of it as well around our data sets. We still own the largest lifestyle database, but we're looking at opportunities to either join that in and use that as a targeting metric, allowing people to place advertising in specific demographic, geographic, etc., but also looking to augment our data with other data sets as well. So there's a lot going on in that space, and being able to lift that up is pretty good. Across our other products, I mean, we're still in one of the worst renting cycles we've ever seen in this country, where we're looking at property volumes or listing volumes down around the 50,000. So, half of what it was pre-COVID. The renting crisis is, I guess, pretty well understood. How we as a country get out of it's probably less clear. There's a lot of talk, but we really need action on the ground. So some of our products are performing better than others. Rent Bond continues to do really well, and we're increasing the audience for that product. We made the call a little while ago to pop it out. That volume gives us better control over the product in terms of where we take it to the next step in terms of looking to maximise the return, not only to us, but also the attractiveness of the product to customers as well.
And RentPay also delivered record revenues and customers. I mean, I think you went above $100,000 within RentPay for the quarter. Are you happy with the progress?
Yeah, it's really starting to lift now. So on the 2nd of this month, we put out in our announcement about the raise that we just hit 7,500. We're now at 7,650. We've got a couple of agencies starting onboarding this week. Look, I'm quietly confident we'll have our best quarter on RentPay growth. Our brand awareness on and to be honest, rent as well is increasing every week. We've got more and more conversations happening, which is fantastic. The product truly is, I know I bang on about this, but it's a dual-sided product. We're attracting consumers off the street to join it for its features, and one of the latest changes we made was dropping our credit card rates down to 0.99%, and we released some information showing that people that are joining off the street, nearly half of those are choosing to use a credit card. Variety of reasons, but so I guess we're capitalising on that as well. But the agent side is incredibly strong as well. There's a few changes going on in the payments side. We're clearly the lowest cost solution for an agent, but over the last quarter, we've really invested in the back end side of it. So integrating into agents' CRMs, integrating into some of the largest providers in the country, we've been able to take what is, a pretty smooth platform for an agent to the next level, where, automated tenant creation and all those sort of things. So we've really invested some time there, and that's starting to pay off as well. And one of the other ones that we did during the well, I guess the last half is a couple of the property conferences as well. I'll be honest, we were a little skeptical of those to start with, but just having our team, being able to display our passion for the product, being able to display our brand, just, that general awareness is, I think, really important. And, they have a long lead time. The decision for a real estate agency to change its payment solution is not something to be taken lightly. So, those are good conversation starters, and then we follow through, and we have a lot of leads to follow through. So pleasantly surprised about that. And I think that's something we'll do more of as well. It's a way of getting ourselves out there in front of lots of people, at the same time. It's common sense, I guess.
And rent.com.au has also recently announced a fully underwritten entitlements offer to raise 1.95 million pre-costs, with your largest shareholder supporting, and director management as well. Can you take us through the investment you'll make with the funds from the offer, Greg?
Yeah, look, there's a number of things. So with RentPay, we intend it to be the leading platform in this country. We haven't shied away from our targets. I see us at 10% market share over a couple of years now. I know I said that over a year ago, so we're a little behind on that, but we really do see it as I guess the incumbent product in this space. So we need to keep investing in all aspects of that. So, coming through on the payment side, one of the positions we have with agencies that we'll take over that arms race on your behalf. So this half, we're really looking to cement that. So things like China Payments, Pay2, there's investment to bring those on board. The China Payments one is probably being brought forward a little bit. We're getting asked about that from agency side as well. So we're really keen to get that through there. I guess I like China Payments because being an unregulated product, there's a better margin opportunity within that product than, say, something like a credit card. So it's a bit of a win all around, and we've got some, I guess, third-party platforms that are keen to capitalise on that as well. So that's taking up a bit of our focus. We continue to work on rewards. The idea or the general theme around our rewards is that what you're doing every day will contribute to your rent. And so that is something that kind of fits into our ecosystem of RentPay, of putting your rent to work. So the rewards is something that's being worked on at the moment in the background. And of course, our mortgage side as well. Now, the mortgage product is extremely complex. There's several flavors of how this can come to market. So the focus at the moment is building up that savings side of it. Now, we can offer a savings product tomorrow that is pretty average interest rate, equivalent to what you'll get in a high interest savings account on market. We want to do a little better than that, and that's where we're working towards. So there's a significant compliance and regulatory component to that as well. So we're just working through that, and some of that takes time. We'd love to have it out the door yesterday, but it's certainly a priority for us. So investing in the product side will continue. The marketing side is something we will lift up. Now, we did a campaign about 4 months ago now, a bit of a short burst on the consumer side. And what's really interesting in that is that we obviously had a spike, but we've dropped back as that campaign's wound down in terms of spend, but we haven't dropped back to where we previously were. So there's a latent awareness there. So you'll see us as we hit the end of this month, we're going to come back out in market with another consumer campaign. What's interesting with this consumer campaign is that we'll be partnering with another brand, a brand that's accretive to us, is bigger, shinier, cooler than us. So it's our first foray into kind of a joint effort where we will, our theory on this is that we'll get some halo effect by standing next to someone larger than us. So we're going to try that. And I think that is something we can look at in the new year to do a little bit more of. But the basics of use of the capital is around increasing the product, both in terms of attractiveness, features, but also in sales and marketing and customer numbers.
Well, Greg, I'm looking forward to catching up with you over the course of the next 12 months to check on rent.com.au's progress. Thank you so much for your time today.
No, thank you very much, Fenella.